What's up everybody, it's Prashant here. Welcome to my YouTube channel and thank you for joining me today. In today's video, I'm going to be talking about which is a better investment, stocks or real estate. This is something that I think about very often and I wanted to share my thoughts with you and see what you think. But before we get to that, I want to take a second to ask you to smash that like button and the subscribe button for the YouTube algorithm. I want to see how quickly we can get to 250 subscribers on this channel. So I would really request you hit that subscribe button and help me get there. So first up, we're going to consider the pros of investing in stocks over real estate. The first thing that we need to talk about is ease of investing. Investing in stocks is really simple, at least here in the US. All you need to do is pick your favorite brokerage, open an account, and you're ready to buy some stock. Of course, my favorite brokerage for the long term is Vanguard, and for the short term, it's Robinhood and Webull. By the way, you can leave the links in my description down below to get free stock on both Robinhood and Webull if you wanted to open a brokerage account with them. On the other hand, buying real estate is a long, difficult process. In fact, I made a video a few months ago detailing step-by-step the process of buying a home, which I know from personal experience. You should go and watch that video after this one if you're interested in buying a home. The second advantage of investing in stocks over real estate is the super low barrier to entry. In fact, you can get started investing in stocks in Robinhood with as little as $1 using fractional shares. Compared to this, investing in real estate is expensive. Most home buyers need a conventional loan, and for a conventional loan, you're going to have to put down a down payment, which can be as low as 5% for a conventional loan, or even 3.5% for an FHA loan, or even 0% for a VA loan. According to data released by the Federal Reserve, the median home sale price in the US in 2020 was $337,000. According to Rocket Mortgage, people are putting on average 6% down when they buy a home. So on average, people are putting down at least $20,000 in order to buy a home. Compare that to just $1 to start investing in stocks, and you can see pretty quickly how much easier it is to get started with stocks than with real estate. The next advantage to investing in stocks over real estate is the speed with which you can invest in real estate. All you have to do is pick up your phone, open a brokerage account, send some money, and boom, you're ready to start trading stocks. Compared to this, investing in real estate or just buying your own home can be a long, arduous process. First, you have to find a home that you like, which can take a long time. Then you have to make an offer, hope it gets accepted, make an inspection, ask for credits, come to agreement, get a mortgage, and then finally close on the deal. On average, it takes 30 to 45 days to close a home, and that's after you've made an offer and gotten it accepted. In fact, finding it and then closing it can be a much longer process depending on what you are able to find, what you're looking for, and ultimately how decisive you are. The next thing to consider is transaction costs. Ever since Robinhood burst on the scene and got rid of trading costs, many other brokerages have followed suit and gotten rid of their trading commissions. In fact, Robinhood or Webull don't charge any commissions on any of their trades, and even Vanguard will allow for commission-free trading for Vanguard ETFs. Compare this to the insanely high amount of fees that you have to pay for any real estate transactions. You might have to pay inspection fees, appraisal fees, loan origination fees, title fees, and a few others. All in all, this can be between 2 to 5% of your purchase price. For a median home of $337,000, the fees can be between $6,000 to $17,000. The next thing to consider is liquidity. Since it is basically free to trade in stocks and the barrier of entry is basically $1, this means that a lot of people are trading in stocks. In fact, billions of dollars worth of stock gets traded on our public exchanges every single day. Compare this to real estate, where there is a limited number of homes on the market on any given time and a limited number of buyers looking for those houses, and they still have to match and go through the 30 to 45 day process to close a deal. Not very liquid. And finally, one of the biggest advantages when it comes to investing in stocks is the use of tax advantage accounts. There is in fact a wide variety of tax advantage accounts out there that you can and should use for your benefit. These include the 401k, the IRA, the Roth IRA, the Roth 401k, the 403b, the 529b, the 457b, and the HSA. Now, I might even be missing some. The point is, there are a lot of accounts out there that give you tax advantages when you invest in stocks. Either you can defer your taxes and pay them in the future, or maybe you can just pay the taxes now and then all of your gains are tax-free and then all your withdrawals are tax-free. So depending on your particular situation, these are something that you should definitely look into and potentially start investing in stocks within some of these accounts. Efficiently using tax advantage accounts can save you thousands or even hundreds of thousands in potential taxes over your lifetime. Alright, you might be thinking that I am all about investing in stocks and not about investing in real estate at all, and if you are thinking that, you are wrong. I love real estate. Let's get into it. Let me be Captain Obvious for 1 second here and remind you that you have a basic need, and that is shelter. No matter who you are, you probably want a house to live in. Now, if you're going to spend money on housing anyway, why not just buy it rather than rent it? Now, there are a lot of reasons for buying your own home rather than renting, but I'm not going to go over it in this video in detail because I already made another video about this. I'm going to link that down in the description below, and you should definitely watch it after this one if you haven't already. The next thing to think about is tax benefits. The government wants you to buy your own home. They are incentivizing this activity by offering tax breaks. In fact, in certain conditions, you can typically write off all the mortgage interest that you've paid against your income on your federal tax returns. The next thing to think about is that you can obviously buy real estate with the intention of just renting it out. In fact, this can be a source of very steady income. Now, obviously, this includes some extra work. You have to find a tenant, you have to collect rent, and yes, you might have to fix the occasional toilet, but you know what? Nothing in this world is free. There is some risk involved, but if you want to make some extra money, you are going to have to take the risk. But if done properly, remember, your tenant will pay for your principal interest along with your taxes and insurance. And if you are able to find a good deal, you may even be able to be cash flow positive. This means that after all of your expenses are paid, you might have $100, $200, $300 left over every month. So, because your tenant is paying for principal, interest, taxes, insurance, and maybe even some cash flow, they're actually contributing to your net worth every single month. The next thing to think about when it comes to real estate is appreciation. Over the long term in the United States, real estate has gone up on average 3% year over year. This is a long time trend that is generally expected to continue. Even if we have a crash in housing prices like we had in the 08-09 era, generally I would expect that crash to reverse and home prices to start increasing steadily over the long term. And at the same time, you can always buy a fixer-upper, put some effort and money into it, and increase its value rapidly. This is called forced appreciation. Okay, now that we understand the pros of investing in stocks and the pros of investing in real estate, let us start talking about which one we should concentrate on. Let me first start out by saying that I don't think that one investment is hands down better than the other. In fact, I own my own home and I invest in stocks. These are both different investment vehicles that serve different needs. On top of that, everyone's needs are different and everyone wants different things, and they might have to tailor their investment strategy according to their personal needs. I will say though that I firmly believe that everyone should own their own home. So if you don't currently own your own home, I would highly recommend making a plan as to how you can get there as fast as possible. After you've bought your own home, the decision to invest in more real estate or just invest in stocks is up to each individual. Most people like to be hands-off. They don't want to be going and buying more real estate, finding a tenant, deal with all the tenant issues, deal with all the repairs. I get it. For those people, it might be a better option to just invest in stocks. For other people who don't mind putting in a little bit of extra work in order to make a little bit of extra money, buying rental real estate can be a great option for additional income. There is one other consideration that is very important to talk about. Now, as we discussed earlier, buying a home can be a lengthy, time-consuming process. Not to mention that you have to come up with a down payment. Now, if you're buying a house for yourself to live in, you can easily go with a conventional loan with a 5% down payment. But if you're trying to buy rental real estate, be ready to fork over 20 or even 25% as down payment. Now, obviously, not everybody has that kind of money just sitting in their bank account. So it might make sense to just start investing in stocks in a regular brokerage account and just keep adding more money into it every month. And hopefully your investment gains are adding more money on top of that. So then when you're ready to buy real estate, you can just sell your stocks and use that money as a down payment for that real estate. This way, hopefully, you'll be able to make more money than the measly 1% that you'll make in a high yield savings account. And that's if you're lucky. In fact, if you know a high yield interest rate savings account that gives more than 1% interest, let me know. I'm interested. Now, obviously, there is some risk involved in the stock market. Investing in the stock market is inherently risky. The market could go down and you could lose your money. Unfortunately, there are no rewards without risk, and you have to figure out for yourself what your appetite for risk is. So there you have it, guys. My thoughts of investing in stocks and my thoughts of investing in real estate and the pros of each. Notice that I did not talk about any cons because I don't think there are many downsides to investing in stocks or real estate. If you do your research and play it relatively safe, there are very few downsides to either of these strategies. Hope you enjoyed the video. If you did, please smash that like button and the subscribe button for the YouTube algorithm and click the bell icon to be notified instantly when I post a new video. I post at least one new video every week with great new financial content, and I would love to see you back on my channel. Go ahead and follow me on Instagram, TikTok, and Twitter. Thank you so much for watching, and see you next time.